90% of traders lose money, and AI can help you avoid becoming a statistic only if you use it the right way. So I've been trading for too long, and the fact of the matter is that people like using AI and LLMs like ChatGPT for quick trading wins. But these large language models are inherently better for long-term investing. They're really good at spotting trends, but they cannot time the market. So the best way to use these tools is to leverage the AI as a research assistant. You can use it to screen stocks using fundamentals. You can use it for analyzing industry trends, and you can even use it for stress testing your portfolio, but please don't use it for technical analysis. So here's the deal, there's definitely a human element in trading. Otherwise, everyone would just use algorithms, right? But the fact of the matter is that AI beats humans consistently at data crunching, pattern recognition, and they never have any bias. So for stock screening, you're gonna wanna use it like a text-based stock screener. Now you can use it like a traditional screener and ask for specific metrics. You can ask for market cap, PE ratios, cash flow, etc. But you can ask further questions to narrow down your list. You can ask things like pros and cons, future outlook, the perception of the CEO. And to hone in your research even further and make sure you're picking the best stock for you, you can even use these large language models to quickly analyze SEC filings. You can get the nitty-gritty, the key details pulled right out of the document in an instant. As far as industry trends go, you can ask for specific questions within a sector, such as how is it currently performing? What's the future outlook? Is it trending up? Is it trending down? And then within the sector, you can ask who's leading, who's climbing. And then once you know your winners and you know your up-and-comers, you can ask for the different strengths and risks of each of these companies. So finally, and what I think is the biggest advantage of AI is stress testing potential outcomes. You can ask what outcomes are likely to happen, such as increases in interest rate or changes in the economic climate. And you can literally feed these AI programs your portfolio and ask, where are you vulnerable? Once you've identified what your portfolio is most susceptible to, you can then ask it to help suggest hedges. You can better round out your portfolio in a way that's tailored to your needs and risk management. So I know I usually focus on more short-term trading instead of investments, but let me know if you want more advice on long-term stuff like this. If you want specific and actionable advice on a more traditional screener, watch how I use FinViz. Or if you want more trading-specific content, check my channel and watch in there. Thank you for watching. Like, subscribe, bye.